Hemindra, as far as PSU banks are concerned, we did see news flow coming in yesterday that a lot of bank recap has happened. We spoke to you immediately after that. But does this is this recap already priced in? It has come in slightly earlier than what was expected. For some banks, it has been slightly higher. For some banks, it has been slightly lower. But do you think that it was already priced in as far as some of these PSUs are concerned and the recent rally that we've seen?
Well, according to me, it should have been already priced in a long time ago because this is as per the budget expectations. The only thing which has happened is, as you said, it's been front-loaded. But the amounts have not changed. Now, the government is saying that they may increase the amount. Now, that, in my opinion, would be material. But can they increase it significantly over what they had originally estimated? It's extremely doubtful. And therefore, the fundamental status of the government banks is not going to change significantly. Because according to me, this kind of 23,000 crores or about that number which they forecasted for FY17 is but a drop in the ocean. They should have actually budgeted for about 100,000 crores. Even for 3 years, they're talking about a 75,000 crore package, which to me is considerably insufficient given the severe asset quality and asset stress that is there in the banking system.
Right. This time around when we saw the allocation, Bank of Baroda did not get any infusion. Now, when we spoke to Bank of Baroda after the results, that's the Q3 numbers as well as the Q4 numbers, the management said that they do not need any infusion. Does this indicate that, Finmin is ready to hear out the PSU bankers before making any decision that should be taken as a positive?
See, according to me, all the banks require significant equity infusion, if not now at some, later months coming in. But I think the government therefore should allocate far more funding. It should increase the fiscal deficit significantly. It should sit down with global credit rating agencies to discuss that we need a significant relaxation in the fiscal deficit. Because once you have recapitalized your bank significantly, that gives a lot of confidence in the market. Their tier 1 capitals will improve, their adjusted book values will improve, and it gives a lot of confidence that the banking sector in India is strong and the government, being primarily the shareholder, is ready to infuse capital. But unfortunately, we don't see these, strong statements being made.
Right. As far as PNB is concerned, the infusion there was 2,800 crores, which clearly surprised everyone. But do you think now that their balance sheet size is lower, you look at the number of 2,800 crores and assume a nominal loan growth for the company, 30 to 35% of their needs would be met. So at least on a selective basis, some banks have been given better capital.
See, according to me, there has been two considerations what the government has based its capital program on. One is by market share. Those banks which have high market share will get higher capital, just like State Bank of India. And the other is you've seen some small, medium-sized banks like Indian Overseas Bank also get a very significant amount, which basically the government is saying that some banks which are inherently weak will have priority on capital. Now, the issue is, I think, it is not just that once you infuse capital, you're going to automatically get credit growth, because credit growth in the Indian economy is really demand-driven. It just tells you that the economy has to pick up for bank credit to pick up, because if banks start pushing credit at this time and it is very poor quality credit, then you're going to again see that the cycle of NPAs will continue.
But Hemindra, just taking it forward from what Pankaj was asking you, why should SBI get any money? It has a capital adequacy ratio of over 12.5%. Either it declares that I have stressed assets and this is my problem, says these are going to be my NPAs, or shouldn't get money then?
So you must understand that State Bank of India, even among the government banks, is the premier bank. It is the most bank which is identified with the sovereign, with the state of India. And therefore, you have to have a signal to the market, to the capital markets, to the economy, that the largest bank in India, which is government owned, will not have any issues of capital. And even if there is a deterioration in asset quality, there's adequate capital to provide for that. That is the signal which has to go in any economy, that your largest bank is extremely sound, is extremely solvent, and is prepared to take the credit forward for the entire economy. So even though, as you very rightly pointed out, that the capital adequacy norms are strong, there's a signal that has to go to the markets that one should not worry about India's largest bank.
Okay, I take your point there, but let me not take SBI. Of course, SBI has a very high degree of corporate governance, and I'm just looking at both some of the private banks and a lot of smaller PSUs. It's not as if that these decisions to give loans were taken just by that it was a wrong business call. One can make wrong business calls. One can estimate that, okay, there's going to be this power demand, and on these business channels, everyone's saying power is going to go up, so I might as well give it to a power sector because the equity value behind this loan that I'm going to be high. There is also a degree of corruption, which has definitely happened and which is not being investigated fully by the government.
See, in the Indian banking system, both private sector banks as well as government banks, there is corruption. The spotlight keeps getting highlighted only on government banks. Unfortunately, the media as well as investigative agencies do not follow corruption charges when it comes to the private sector. I think corruption is endemic in Indian society. It is very clear. If you see a lot of these industrial and especially power sector loans, which mind you even private sector banks have been exposed to, if you ever to do a valuation of the assets, you will find that some of these assets actually don't exist. Now, all this type of lending was done in a boom time scenario. And I'd also like to point out that this is not just individual bankers' decisions going wrong, but it was government policy that once you had your fiscal stimulus post Lehman and the markets then demanded for the government to reduce the deficit, the governments did reduce the deficit, but at the same time, they allowed these banks to increase infrastructure credit to basically take the load from the government to the banking sector to provide some stimulus to the economy. So a lot of this has been state-led. So that the Indian economy did not suffer too much. But a consequence of this, of course, is that since the economy has not picked up and these assets have become bad.
One of our colleagues, senior colleagues in our sister channel, NDTV 24/7, Srinivasan Jain, once told me a story where he went to this big infrastructure developing listed company. I'm not going to name it. And the person said that, the logic is that you essentially show that you have, if you have a 80-20 debt equity ratio, you need to show your cost at 120. So you get 96 debt and 4 is your equity. And the government should actually bring this down to 90-10. Then my equity will be just 2. So that's what are the guarantees right now that once you've infused this, again you have a cycle of lending, that this again will not happen?
I think you've raised a very valid point. I think once you recapitalize the banks, it's extremely important, and I've been saying this for some time, that you unleash the regulatory agencies like the Enforcement Directorate, the Central Bureau of Investigation, on some of these errant corporate borrowers who have really siphoned off monies from the state, effectively from your state-owned banks. And they have to be thrown behind bars wherever you have a valid case and wherever the Enforcement Directorate already have very strong evidence against them, because there's no point in recapitalizing your banks and allowing this type of lending to continue, because once these industrialists see that some of their colleagues are enjoying the graces of the state, then all of them will come rushing in and start paying up their dues.
Okay, Hemindra, I just want to take the opportunity of having you here to move away from the banking to a little bit about the monsoon. We've seen a lot of, actually, except for an exception today, Harish Krishnan, who had come just a short while back, and he was saying that he doesn't believe that the monsoons are immediately going to lead to rural consumption revival. We need 2 consecutive monsoons. Most of the market is betting that there's been good monsoon this year, there's going to be good monsoon this year. Rural consumption revival, productive consumption, seeds, pesticides, tractors, financials which are exposed to the rural market, and then you have the entire final consumption as well. It revives. Do you think that this picture is a little simplistic? It does not take into account differentiation within India's farm sector?
Oh, most definitely. Today, because of the surge in the market, because of global liquidity, everyone is struggling to take any small bit of news and try to hype it up to justify where the valuations are today. I think the Indian agriculture sector is an extremely complex sector. There has to be, it's not just a question of a good monsoon. Yes, we all hope that there will be a good monsoon this year. It should lead to some recovery. But I think it's very important to find that the state should play a far more proactive role in Indian agriculture and Indian and rural India, because one has to bear in mind that 50% of your employment is with rural India. And mind you, that only takes in about 16 to 17% of bank credit. In contrast, the top 100 borrowers in the banking system, they constitute about the same, about 16 to 17% of credit, but a fraction of the overall employment. Therefore, the state has to be directed, and you should not leave it to the market, really, because when it comes to such things, the market to me is not a very fair mechanism to improve agricultural investment, to improve agricultural productivity. So this good monsoon must coincide with far greater investment in the rural infrastructure, investment in giving higher rural wages, because that, in my opinion, will create higher and more effective demand. And that is why you're seeing a lot of these FMCG companies are complaining that rural India is not taking up the sales that it had originally estimated.
What you're saying is largely old-fashioned Keynesian economics, but you're going to be accused of being much like the color of the shirt you're wearing, a pinko liberal. But on that note, Hemindra Hazari, we have to thank you.